Welcome to the Techno Fundamental Report for April the 30th. The trend is your friend except at the end where it bends. With trend following, you have to understand that we have a trend has a beginning, a middle, and an end. Some trends last a very short period of time, which is really not even considered a trend. Some trends last months or years. So when the trend ends, you need to be aware of the fact that it's time to be reevaluating what you're doing. So one of the things I did want to mention was that we are in a power trend, and you might want to pause your video player to see what the rules are. Now, this mainly applies to the NASDAQ. But if we look at the NASDAQ over the years with power trends, they last a variety of days. The longest one was in 2016. It lasted 301 days. The shortest appears to me to be in 2020, lasted 99 days. So this can be, a power trend can last for a while. So what you want to do is you want to lean on the gas. Now what I've got here is an example that, let's see here, 2018. And I go back and show the beginning of a power trend and the end of the power trend. So you can see using moving averages how you were able to really evaluate the trend. So when the trend ends, which this is where it started to end, because a power trend will end when the 21-day moving average crosses below the 50-day moving average. So another example would be 2010. Power trend begins and the power trend ends. So you just need to be aware of the fact that when you're in a power trend, the odds of success of buying stocks are very high, or higher than average. So let's look at where we are now. This is the NASDAQ as of today. You can see here we actually had a follow-through day 3 days ago, actually 4 days ago, where you had this meaningful move on volume that was higher than the prior day. So the NASDAQ has recently had a follow-through day and is somewhat consolidating for the last 2 days. Same thing for the S&P 500. You can see here we actually did not get a follow-through day because the volume was not high enough. But we did move up, and we are consolidating for the last couple of days. The aggression index continues to look good. We're above the moving averages. Both moving averages turned up. Now remember, this is where we're taking the NASDAQ and we're dividing it by the consumer staples to come up with a ratio that tells us when to be defensive and when to be aggressive. Right now, this indicator says be aggressive. Now, interest rates have been kind of moving up here. As you can see here with the 5-year Treasury yield, we're back above 4%, almost 4.1. And the index that we use to measure this for the last 125 days, interest rates have climbed about 13%. So that's a little troubling that we're seeing higher interest rates. Now, on the primary trend of the S&P and the NASDAQ, the primary trend continues to be above the 200-day moving average, making new highs. So the primary trend continues to be up. So looking at some stocks, I wanted to mention a few. This is a company called Bloom Energy. And I just wanted to show some technical work that we do. Now you can see here that we had a gap up buy signal. Remember, a gap up. Now we take the volume, the average volume for the last 50 days on this company has been roughly 10 million shares, 10.5 million shares per day. So if you have a day where volume is 150% of the average, well, and then at the same time you get a meaningful up move, that's a gap up. And then you set your stop loss at the bottom of the gap. So you can see here with this case, it's held. Now we just got another gap up today, or let's see, today is Wednesday. It's Wednesday, but you can see here we're getting the necessary volume for a follow-up gap up. So what you do is you take the low for the day, which is 267.46. That is your stop loss Give it a little bit of porosity in the early days, early stages of a gap up, because there's a lot of volatility, usually 1 to 2%. But if it breaks 267, 265, I would have to reconsider my position here. Now here's Intel, which is an old name. We're talking about a $500 billion company. It too is getting a gap up. You're getting a very meaningful gap up today. So then again, you would set your stop around 85 in that area there. Then if we look at ST Microelectronics, they're involved in semiconductors for efficient energy production. So you can see here, we're not necessarily going to have a gap up. We did have a gap up 1, 2, 3, 4, 5 days ago. Again, your stop would be at the bottom of this gap, but you're breaking out above this shelf here, what we call a mini base, plus a small trend line. Looks very strong, getting good volume. We'll just have to see. Now, I'm also seeing some names in the energy area. This is a company called Archrock. They're into oil equipment and services. Stock looks fairly good. You didn't get a gap out. You got what you call a standard breakout above a very nice base. So, and it's kind of proven itself. You're starting to see somewhat of an uptrend. So, you don't necessarily want to buy the gap up, but you want to wait and see if this thing proves itself. And so far it looks pretty good. Looks all right. Now here is Arrow Electronics. Again, we're seeing a lot of electronic stocks out there. What's going on there is the biggest bottleneck with the AI story is the lack of energy. And so they're going to need to, build out more of the grid, more energy components are going to be needed, more electrical components such as transformers, switches, things of that type. So Arrow Electronics, now I will warn you about Arrow, and also I'll warn you about Archrock. These stocks report earnings next week. And I just don't ever recommend people buy a stock on top of earnings, but I would watch for the earnings report and see what happens. So if you have any questions, please let me know. Thank you very much.